Good afternoon, everyone. The presentation will start in 1 minute. Hello, and welcome to this afternoon's webinar. This is the 8th in our COVID series. This webinar will feature the co-chairs of the Council of Cooperative Economists, who will discuss the state of cooperative business 6 months into the global pandemic. Hi, I'm John Torres with Ncba CLUSA, and I've just got a few housekeeping notes for you. Today's webinar will run approximately 60 minutes, and participants' audio will be muted for the duration of the webinar. Now, if you have a question, please type it into the question box that's located in your GoToWebinar control panel. We'll be monitoring the question box during the presentation, and we'll do our best to get to as many of them as possible during the question and answer session. This webinar is being recorded, and the recording will be shared via email in the next few days. Now, to get things going, I'll turn it over to our moderator, Ncba CLUSA's President and CEO, Doug O'Brien. Doug.
Thank you, John. Thank you, everybody, for joining us today. I am Doug O'Brien. I'm the President and CEO of Ncba CLUSA, the National Cooperative Business Association, which, of course, is the apex association for cooperatives in the United States. As such, we do advocacy for the cooperative community, public awareness, co-op development, and thought leadership. And just 3 years ago, we launched the Council of Co-op Economists with support from CoBank and Nationwide. This group of experts across the cooperative sectors bring us critical information, and they show the impact that co-ops have across the economy and in society. Today, we decided to bring a number of our council members together along with other experts to talk about where we are in where the cooperative community is in this very unique time of COVID-19, how this pandemic has affected our cooperatives, and really, maybe as importantly, what it means for the future of the cooperative community and what it means to be a cooperative in this unique time. So I'd like to hand this over to the one of the two co-chairs of the Council of Co-op Economists, Dan Kowalski with CoBank. So Dan, please take the microphone.
Great. Well, thank you, Doug. Let me just set my timer here so I don't go over our minimal time limit. It's good to be with you all. Thank you for being here. Thanks to Ncba CLUSA for putting this on. It's a good metric, a good time period to think back about what's happened over the last, say 3, 4, 5, and now 6 months. I'm going to talk briefly about a contingent of customers for us at CoBank that's very important, and that's the agricultural co-ops and others along the way. We'll talk about different co-ops across the economy, actually. So I'm going to talk a little bit about the impact that COVID has had over the last few months, and then move into some of the things that the co-ops have been doing to mitigate some of those impacts. So the impacts really have been varied. If you look across the industry, agriculture is not monolithic. We have everything from specialty crops that are largely in California and the western part of the country, to dairy, which is everywhere. We have grains and farm supply and all kinds of things in the Midwest. We have rice and cotton and on and on. So as you can imagine, some things were hit much harder than others, just what was going on in the economy and with transportation. I would say, first off, financially, a lot of co-ops across those different industries really took some protection really early up front. So we saw dozens of ag co-ops take up the PPP loans. And we also have the growers and the ag producers that are members of those co-ops. They were taking up, there was pandemic funds that were available through the USDA as the pandemic went on into the summer. And so that really helped the receivable side as well as the co-ops being able to stay fully staffed and not go into some sort of concern on a short-term nature. The hardest hit co-ops, really came down to dependency. It wasn't necessarily size. It wasn't necessarily industry. Some industries were hit harder than others, but even within an industry, there were some that thrived and some that haven't. And here are the three things that I would highlight as the biggest ones. The ones that were hit the hardest were dependent on food service demand. They had harvesting or processing employees that were, that they really had a difficult time socially distancing them, and if they did, it would impact the business significantly. And then third would be the co-ops that were dependent on export sales. And so you can imagine why all three of those are pretty important. The industry that was really hit the hardest was fresh produce. For obvious reasons, you can't store it and wait for a better time. Those products have to move. Those products ran into transportation problems from remote areas trying to get them across the country. And so you had a transportation problem, you had a demand problem, like a light switch going off. A lot of these co-ops lost their demand for whether it's onions or berries or what have you, especially things that would go into food service demand. And so those were anything that had a short shelf life or was aimed for food service was a really, really tough thing. The global trade environment really suffered as well. As you can imagine, the pandemic kind of growing across the world, starting in China, through Asia, over into Europe and over to the US. If you had really important markets that you were selling to anywhere else in the world, again, you have a problem with disruptions in transportation, but you also had demand shutting down for some products, specifically, say tree nuts, very important to California, and about 80% of those nuts, 80% of almonds, say, are sold overseas. People don't need almonds necessarily in a pandemic, and so you have these roller coaster rides that a lot of our customers have ridden on. Let's see, the next thing. Let's be a little bit positive here. I think some of the co-ops that actually benefited. If you were in dairy, if you were in rice, if you were in wheat flour, if you're in the milling industry, and several of our customers are on the cooperative side, prices actually shot up for your product. The rice thing was a global demand, countries really being concerned that they're not going to be able to get the rice that they need. And dairy and flour, we're consuming a lot more stuff at home. We're eating cereal, we're drinking milk, or there was an offset that happened at the retail versus the food service. And so those were some of the bigger things that happened. Prices did get impacted significantly. On the other side, there were a lot of different things that happened along the animal protein side. Grains all got hit pretty hard price-wise. So there was a lot of impact that was just looked very different. How did being a co-op help? As always, if the commodity prices drop, members can offset a lot of those losses by being part of a co-op. If the co-ops, usually if prices are really hurting the producer in agriculture, they're often not hurting the co-op or maybe benefiting the co-op. And so you have this offsetting that happens, which is a really great thing in almost all environments. The second thing I would say is that some growers just really struggled through the worst of the shutdown. And when you're a member of a co-op, especially an established member of the co-op, you tend to be able to negotiate for better, more flexible, terms, whether it's in your business, whatever you have to do, receivables or delivery. So co-ops tend to be more supportive than, say, some other businesses that are not structured with you as an owner. The last thing I would say is in innovations that would outlast COVID, I would say there's an urgency for improved rural broadband. We've seen that. We finance the rural broadband industry. We've seen that in spades, that there is a lot of activity across the industry, but also on Capitol Hill, and that's not going to stop. I think this is going to push the issue of the urban divide further down than it has been. The second thing I would say is that just-in-time delivery is being questioned and reevaluated. This has been kind of the go-to way of shipping things for the last 20 years. It's what all of us in the business realm were taught in school. You know, if you can cut down your inventory, shorten your supply chain, it's better for everyone. That did not work out so well for the first few months of this pandemic, and that's going to be reevaluated. The third and last thing that I would say is diversification of customers and supply chain. So you're going to hear a little bit more from the grocery side. This will be interesting to connect the two, but the food industry generally has moved in the last several years to wanting large suppliers to be connected to growers or suppliers, you know, whatever it is, wherever they're getting their product from, whether it's direct from the farm, from a co-op, or from someone else, they want to have a dedicated supply chain so that it's efficient, it's easy, they know it's coming. And I'm not sure if that makes the most sense now, given that folks that had all their eggs in one basket really were hurt on the food service side. So there's a lot of reevaluation that's going to go on for the next several years, and I'd be happy to answer any questions about that, but I am over time, so let me turn it back to Doug.
Dan, that's a great kickoff to the series of speakers, particularly given the diversity within agricultural co-ops. And I think you really hit on how you know, how the sector is going to reevaluate how they you know, took some of the assumptions before this pandemic. I'd like to go next to our other co-chair on the Council of Co-op Economists, Mike Shank, who will talk about some of the experience from the credit union sector. Mike.
Thanks, Doug. Good afternoon, everybody. Just to level set, I represent the Credit Union National Association, roughly 5,200 credit unions throughout the United States. They hold in the neighborhood of $1.7 trillion in total assets, and they serve 120 million or so members throughout the United States, who broadly reflect the more sort of makeup of average working Americans. Credit unions collectively, as financial cooperatives, delivered an estimated $15 billion in direct financial benefits to their members in the form of lower rates on loans, fewer and lower fees, and higher savings yields in 2019 alone. And they also delivered an estimated $5 billion in indirect benefits to bank customers who benefit from the fact that having credit union competition in the marketplace lowers the pricing or makes pricing more consumer friendly in for-profit banking institutions. We estimate the overall economic impact of credit unions in the United States in 2019 was in the neighborhood of $225 billion. And while credit unions employ 316,000 folks throughout the United States, the jobs impact that they have is about 1.12 million overall. So they're a real force in the marketplace. They represent about 6% of financial institution assets. They've been growing quickly lately, but as I say, they're a relatively small segment of the depository arena. Credit unions collectively went into the downturn in a very strong position with cyclical high levels of earnings, cyclical high asset quality, so very low delinquencies, very low charge-off rates, a lot of liquidity, and most of all, I think the most important thing is that they had near record levels of capital going in. Their financial health was, I think, broadly reflected of financial health in the consumer sector. The Federal Reserve reported that going into the downturn, that consumer net worth as a percentage of take-home pay was at a record level. So, you know, we broadly reflect how our members, our consumer members are doing, and going in, we were in really good shape overall. Credit unions as financial cooperatives differ from other types of financial institutions in the for-profit sector, of course, in that we don't have stockholders, and because we don't have stockholders demanding a market rate of return on their investment, we are more likely to go into crisis with a different mindset altogether. In fact, Congress created credit unions back during the Great Depression so that there would be financial institutions in the marketplace that were willing to lend during financially difficult times. And that's exactly what we've done in every subsequent crisis. The record is very clear. Credit unions tend to view capital as a war chest to be built up during good times and then used in tough times to get their members through those very difficult situations. In many respects, credit unions really are financial first responders in the United States. As I say, historically, we've stepped in during every crisis and really filled a lot of gaps that the for-profit sector left. And a couple of examples of that that I can think of historically, in the Great Recession, for example, bank lending over the course of the downturn and the subsequent weak recovery actually went down overall. Credit union lending over that broad period of time essentially increased at a very strong rate, about 15% over the course of the 5 or so years in the crisis and then following the crisis. More recently, credit unions have participated in a really big way in the Paycheck Protection Program. Nearly 1,000 credit unions originated PPP loans with an average loan size of $49,000. That's less than half the average size that was reported by for-profit depository institutions. So you see a real clear focus and dedication to independent mom and pop Main Street businesses, not chain restaurants, not sports franchises, a real clear focus on just neighborhood businesses. In all, credit union PPP loans, we think, supported more than 1 million pandemic-related jobs. And a recent study by Cornerstone Advisors found that credit union PPP loans supported more jobs per million lent than any other financial service sector lender. So really great news on that front. A couple of really important and significant developments have occurred over the last 6 months from a financial perspective within the nation's credit unions. Obviously, with the incredible fiscal stimulus, we've seen just a tremendous increase in assets overall as depositors deposited those financial stimulus checks. We're on pace to experience collectively roughly 15% growth in total assets in credit unions this year, in just this 1 year, which would be a 30-year high in asset growth. We also are engaged in a lot of other helpful activities. As I say, we've served through many disasters in the past. We're doing the same sort of thing this time that we've done in the past in terms of direct assistance to members, low and no interest loans, loan modifications, waiver of fees, and so on and so forth. And those effects are obviously having very direct influence on credit union earnings overall. So we see some credit unions not only experiencing declines in capital because of the fast growth in assets, declines in capital ratios, I should say, capital to assets, because of the fast growth in assets, but also because, as I say, they've been willing to step in and help people, and there's an earnings related effect associated with that. When we forbear on loan payments, earnings go down. When we waive fees, earnings go down. And so we recognize that, we accept it, it's happening, and the combination of that fast asset growth and the lower earnings is having an effect on overall capital ratios. So that's one of our big concerns at the moment. And going forward, I'd say the biggest concern is, as you may know, credit unions are not-for-profit financial cooperatives. At some point in the future, we're going to have to pay for the whatever it ends up being, $3 or $4 trillion in fiscal stimulus. And we are very concerned going forward, not necessarily over the next 6 months, but over the next year or two, that the piper will have to be paid. And I don't think that necessarily they'll come after financial co-ops specifically, but there will be a really, I think, meaningful look at all types of tax preference, and all types of tax preference will be at risk. And so what that means over the long haul is that at least a chunk of those significant benefits that credit unions have historically delivered, a significant chunk may be at risk going forward.
Mike, that's a great presentation of really what the co-op identity means for the consumer financial institutions for cooperatives, what it really means in communities in those families. And as a group of entities on the call today that are concerned about policy, looking on that horizon and seeing that that real potential that people will be looking at the way that policy has appropriately treated co-ops and making sure that that continues in the future. I'm going to hand it off to Mo Manklang here in just 1 second. I have a couple numbers. I really appreciate the numbers that Mike shared on the Paycheck Protection Act. We were able, through public means, we were able to see how many co-ops took advantage of the PPP in terms of loans over $150,000. That's the way that they provided the data. That was the only way that it could be cut. So this doesn't include loans under $150,000, which, as Mike pointed out, there are many of them, particularly credit unions really focused on those smaller loans. But for those larger loans, we saw over 1,800 loans to firms that identified as co-ops with the projection of saving, perhaps 90,000 jobs. And that was just kind of that first round of PPP that we saw. Some caveats around that data, but really meaningful. Something that Ncba, CLUSA, and CUNA, and CoBank, and everybody on the call today worked very hard in coalition to make sure as many co-ops as possible could be eligible for these critical loans, as already been described. But now we're going to talk about worker co-ops, and Mo Manklang, we'll hand this off to you if you'd turn on your camera, please.
Thanks so much, Doug. So yeah, I'm going to zoom in on just the worker co-op sector. Those are some really good numbers to understand. We have a long running effort to understand what are the financial impacts on the co-op sector. We have done over the last few months a survey of our membership and other worker co-ops that are not in the Federation of Worker Co-ops membership, and so we actually got a lot of really great information about what worker co-ops have been up to during this time. So as we know, worker co-ops that are completely owned and run by the workers, they're just by nature of what they are fundamentally centered on the workers, and they really quickly pivoted to meet the needs of their communities. And that's not to say that they're not experiencing the hardships that all small businesses are looking at right now, of course, but we are seeing some really important trends across the worker co-op sector. Despite going through these hardships, these worker owners are making decisions collectively, and that's really influencing how the impact translates not just to the business, but to the families and the communities that surround our worker co-ops. So, what we saw was that the worker co-ops are way more likely to keep their workers, right? So, in this moment where millions are unemployed right now, and more and more are being added to that, as the months go on. The majority of the co-ops that responded to our survey kept the same workforce, and if they didn't, they just made the collective decisions to reduce their workforce, to furlough, and then rehire workers. And we even saw some co-ops hiring workers. And I think a really important facet of this is that worker co-ops have typically been the solution for communities that are locked out of jobs otherwise. So, they can't get a job, so they're creating their own job. And a lot of times those are in those essential worker industries. So food service, cafes, bike shops, home care, child care. So we're seeing a lot of workers working together to come up with solutions, which that's the thing that we know. That's what we say when we're promoting co-ops, right? Is that, when you have skin in the game, when you have a voice in your workforce, you're able to make those decisions collectively and spot areas where you can pivot really quickly. And just to underscore, who are the people that make up the worker co-ops? 58.8% of people at worker co-ops identify as people of color. So these are the smaller businesses. They're majority people of color. More than 60% of those workers identify as either a woman or as non-binary. So we are really looking at the segment of workers that really need the most amount of support right now. So, one thing that I have found really encouraging is that a big group of our businesses, the ones that are the oldest among the worker co-ops, like South Mountain Company in Massachusetts, they already went through the crash of 2008, right? So they looked at that and they said, we have to make sure that we understand our strengths and weaknesses as a business. And they made a plan to be prepared back in 2009. And so that right now, as we're going through this financial crisis and health crisis, that they're able to be prepared. So they're making decisions together. They have kept the same rate of pay for everyone, but making accommodations for families so that people are working the amount that they're able to work and they're sharing that burden. So, we're seeing other co-ops like Design Action Cooperative, they switched to a flat salary for all workers, regardless of the hours worked, regardless of like what the work area is. And it's actually spurred them to think more intentionally about equity in their wages moving forward. So I think that's really interesting. In terms of pivoting and adapting, we're seeing some co-ops like Red Emma's in Baltimore that worked with 6 other businesses in the area, primarily cooperatives, and they created a general store to help with distribution. In Seattle, we saw a New Day cooperative that actually just started during the pandemic, and that's a partnership of local producers, growers, bakers, florists that worked together to do local distribution. So they created that almost completely this year, and so that has been up and running since May. 86% of the worker co-ops that we talked to already had structures in place to really quickly make these decisions, which is why we think they're able to pivot and adapt so quickly. So because we're kind of like all used to, collective decision making and breaking out into committees to attack specific issues, we know that that's really, really helped in this time. And we're also seeing that most of our co-ops are engaged in some kind of mutual aid network and are sharing resources, whether it's like mental health or finances, or just like actually going out into their communities. A Slice of New York actually put together a grassroots collaboration of organizers of small businesses to do a community meal initiative to provide help for hospitals and at-risk families. So we're seeing a lot of our members rallying right now, but at the same time, I think as was mentioned before, a lot of our members are also really battling some of the being able to be eligible for some of the loans that are out there. So I think as we continue into the conversation, I think it's important to continue our advocacy efforts to make sure that co-ops continue to be a part of the conversation for COVID relief.
Thank you, Mo. Yeah, no, I think that last point's a really important one. Well, as a coalition, we made, I think, some really great strides. We also learned that there are some true challenges for co-ops to be able to access some of the relief. Just a quick note on a housekeeping note for those who have questions for the panel. We get to hear from 2 more of our experts with some quick comments, and then we'll move to questions. Please put your question in the question box as opposed to the chat box. In the question box, and we'll address as many of those as we can. Next, we're going to hear from a leader in the consumer and food co-op sector. Robyn DesHotel is with the National Co-op Grocers. Robyn.
Hi, Doug. Thank you very much. Thanks for having me today. Robyn DesHotel. I'm the CFO of National Co-op Grocers, and I want to tell you a little bit about how COVID has impacted our network of about 147 cooperatively owned grocery stores across the United States. There have been a lot of impacts. The COVID has been very significant for cooperative grocery stores because our store employees are frontline workers. They are essential employees. And so that means that there's no reasonable work from home option for the vast majority of them, which means lots of employees who are fearful for their safety and exhausted from 6 months of fighting on the front lines. As our customers were pantry loading in March, probably you guys did the same way that I did a little bit. That led to stockouts on the grocery store shelves and the consequent difficulties with replenishment, and of course that has an effect on operations. Our stores implemented safety measures, and we were some of the first to implement things like plexiglass dividers and sneeze guards, having extensive cleaning procedures for the store, and eliminating self-serve deli areas that were considered to be higher risk. COVID also forced our stores to transition to e-commerce operations, a click and collect kind of operation, which was not something that most of our stores had done in very much beforehand, and that required figuring out the additional labor to pick orders and figuring out the space for staging orders for packing and storage in relatively small stores, and that can be really that has been quite a challenge. There's been heightened concern about staff safety, of course, and that's led to the implementation of things like customer metering. Sometimes the stores institute it themselves if the community or the municipality didn't do it themselves, limiting the number of customers that can be in a store at the same time. Most stores required face masks or face coverings for anybody who was in the store, and the implementation of hero pay to recognize that that their frontline worker employees were going above and beyond and paying an extra $1 or $2 per hour as compensation. And then there have been in-store, tensions and confrontations over face coverings. That has created the need for de-escalation training, which NCG has been providing, as well as preventing burnout of people who are, the managers and the employees who've been on the front lines for so long. Some important financial decisions, a lot of important financial decisions have also had to be made because a lot of our stores have had a lot of prepared foods revenue that has gone away. They've had to figure out how to replace that. And then with an impending recession in a low margin business, they've had to consider how they're going to prepare themselves to weather a recession in the short term. And then, of course, decisions like whether to apply for a PPP loan and the likelihood of forgiveness and all that entailed. Next slide, please. I also wanted to point out that the network sales, and this represents the same-store sales growth for all 147 or so of our stores in 2020, we had a huge spike in March. But since then, the growth has come down and been sort of trickling back. And in comparison to some other grocery stores which have had stronger sales growth, I wanted to note that our stores, which are more specialty in nature and with an emphasis on food service, has had slightly slower growth. And even though in any of those months the network growth has been -5% to +5%, the range across the network has been vast. Some stores being up 30% and other stores down 30% or thereabouts. Next slide, please. Some of the behaviors that co-op grocery stores have, we're certainly known for having concern for our community and having compassion for all of our members and customers and our employees. And we're also a trusted, or hold ourselves out to be a trusted community resource. And so some of the things that we did during the pandemic to distinguish ourselves from others, first of all, and quite basically, they remained open. to provide an essential source of food for their communities. They created dedicated early hours for senior citizens and others who are more at risk. They, of course, mandated face masks in the store, and many of the stores paid hero pay to reward their staffs for the difficult operating environment that they were working in. Next page, please. Certainly, there have been a lot of changes that have been forced on cooperative grocery stores, and some that have simply been implemented as a way of pivoting towards what comes next. The stores that have implemented e-commerce or click and collect operations are likely to continue those operations if they can be break even or profitable. The amount of labor that's required to conduct the e-commerce operations can be a bit prohibitive, and so for those who can figure out how to make that work, that's likely to be a lasting change. Some stores have diversified their supply chain, pivoting more towards the local meat and produce suppliers that they're known for and they have relationships with, and generally taking a more active approach to sourcing so that they can keep their shelves filled. A lot of stores have gained more flexibility in how they're using their floor space, because the deli counters and the food service counters have had to go away. Well, they've had to figure out, well, can we use the space in a different way? So in the past, where stores have sort of set their configuration and then forgotten about it, in the future or in the present, they're being much more flexible about it and figuring out how they can reset their configuration for when self-service food service comes back to being available. And some stores have created programs that are focused on special communities, like ready-made meals that can be taken away from the store and cooked at home, instead of ready-cooked meals in the store. So those are the things that have affected co-op grocery stores, and it's been a challenge, but they are really rising to that challenge.
Yeah, Robyn, I really appreciate that. I have to say my own personal experience in the food co-op that my family are members of here in Tacoma Park, Silver Spring, Maryland. Many of those things happened, and it strikes me as it's so much sort of exemplary of what's happened in this pandemic, that characteristics that exist are kind of amplified. Some of the dynamics that we've seen from both, in society, certainly many things that have been very troubling for food co-ops. It's that concern for their workers and for their community that have really come out. So I appreciate all those comments. So again, if anyone has a question, please put it in the question box. We have one more expert to hear from, last and certainly not least, a member of our Council of Co-op Economists, Russell Tucker, the Chief Economist with the National Rural Electric Cooperative Association. Russell.
Thank you, Doug. Good afternoon, everyone. Here at NRECA, we represent about 900 electric cooperatives, mostly in rural America and the edge of metropolitan areas, right? And so we serve about 56% of the nation's landmass, about 42 million people. And we've been tracking the new infection rate for COVID across our members' service territories, and today the new infection rate is about 3 times higher than it was back during the April-May time period. And so certainly the crisis is not over yet. So I'd like to share with some of the challenges and some of the outreach of electric cooperatives. Electric cooperatives, their electric sales typically follow the economy, and so particularly in the April-May period, there was a sharp reduction and electric load, electric sales, kilowatt-hour sales, which followed the stay-at-home sheltering, and I think it was common for co-ops to register a 10% reduction in sales or greater. Some of that has recovered, but we expect sales, kilowatt-hour sales will not recover for several years. So unexpected loss in sales impacts revenues. Another issue, fortunately, co-ops at the peak of the stay-at-home orders, the vast majority of co-ops temporarily suspended electric service disconnections for non-payment and waived late payment fees, right? And so this is one of the steps that co-ops took to reduce stress on local families and businesses. So if consumer members have missed payments and have a past due balance, their electric co-ops now are helping them by working out a payment plan or a way forward to start paying down accumulated balances. And so this is part of the members' compact with each electric co-op that they have. And so, the issues of lost electric sales, late payments, combined, it challenges some co-ops' ability to finance day-to-day operations. Our members are much smaller than the large investor-owned utilities and don't have the same financial flexibility that those players in the electric industry have. And so we are very active on the Hill, seeking additional funds, more than $4 billion for low-income heating energy assistance. And also we're seeking the ability to refinance our debt. Electric co-ops are excellent customers of the Rural Utility Service debt, which is provided by the Federal Financing Bank. Excellent customers in the sense that the federal government makes a profit off the loans made to electric cooperatives. Currently, there's not ability to refinance at market rates. And so we are working hard on the Hill to refinance our $42 billion in loans at current market rates, and that would provide a nice savings for electric cooperatives in serving their communities. Separately, if you look at how co-ops have distinguished themselves, say from other electric utilities during this period, it's certainly through concern for community. Many electric co-ops have accelerated capital credit returns, refunded security deposits to help members who are struggling to pay their bills. And so that's one way co-ops are helping members pay their bills. But co-ops have been involved with local restaurants, providing meals to seniors, drive-in lunch boxes for the community, and importantly, some of you may know that electric cooperatives are very much becoming involved in the rural broadband space. And currently we have 150 members in the retail broadband space. And so electric cooperatives have been out there. Their retail business or their subsidiary broadband business has been providing free hotspots in school parking lots. One co-op actually worked with the school board to place buses around where members lived and turn the buses into hotspots. And so that's a really important innovation. And I think going forward is going to be even more important. Currently 6 million rural households are without broadband, and the sheltering at home orders just point to the importance of being able to work at home, using the internet, the ability of kids and students to access the internet for their schoolwork, the need for telehealth through the internet, and all of this is getting even more attention that's well deserved. And electric co-ops are very much involved in expanding rural broadband, depending on their community needs, and they're looking at different technologies. And I think this is probably, Doug, in the questions you asked about innovations, I think this is a very important innovation that will continue.
Thank you, Russell. That's a great set of information from the experience of the rural electric cooperatives. I just want to remind people, a little housekeeping, that if you'd like to ask a question, please put it in the question box, and I'll be able to share your questions with the panel. So as we move towards the question time, I'm going to ask all the panelists to go ahead and turn your cameras back on, and we can have a panel discussion. And as I said, I guess before we started, to the panel, feel free. This can be a conversational moment between all of you who have kind of such a deep knowledge of your particular sectors. I'm finding this fascinating, the string that connects the different sectors, and how we're seeing, concern for community. I think how we're seeing both the resilience of co-ops today, but also how we think about resilience, in the future. I think I heard that both from Dan Kowalski with agriculture and Robyn certainly. And so that might be the first question that I'll ask is, and I'll just kind of open it up to any of the panelists. And it's that notion of a resilient, business. What do you think folks have been learning in your sector, and what might that mean for the future of cooperatives in your sector?
If I can start.
Please.
A lot of our co-ops currently have field linemen who clearly have the ability to work in the field anytime, communicate who they need to communicate with. A lot of the smaller co-ops really did not have a work-at-home capability before the COVID-19 crisis. And so these co-ops had to make investments in new computer equipment, communications technology, and now that that's done, and there's some experience with that, moving forward, we believe electric co-ops will be even more resilient in, say, planning and responding to storms. We're in hurricane season, right? Before there was a need to stay at the office to communicate with the members and be there during the storm. Now cooperatives can plan ahead of time and have more flexibility in meeting potential storm damage. So that's one way I think we'll be more resilient in the future.
That's a great example. Other panelists have a response or comments to that on resilience?
Yeah, I can speak from the ag and food side. Moving on from some of the things that I said of just running into issues with supply chains, I think there's probably going to be more investment when capital is available for redundancies, and that means being able to more quickly move from very specific packaging to a completely different packaging size, what needs to be on the labeling, those types of things. I think a lot of co-ops would have been in a much better position if they were able to do that quickly. This was something that never in the history of many of these co-ops had they encountered something like this, where that benefit really would have helped them. It wasn't even a consideration. And so I think things like that, just redundancies that can help them shift quickly and avoid sales losses and avoid having to destroy product in the fields or just write it down. Those are things that at the end of the year, they're going to look at their books and say, what could we have done to avoid some of the damage and some of the financial losses that we had to incur? And so I think those are the things that they're going to be looking hard at.
Yeah, it's a great example. Other thoughts on resilience?
Yeah, I think this is a moment where a lot of our members are realizing how important their decision-making structures are. So, no matter what structure, it's been so important to understand, like, who's making decisions, how quickly can we make them, like how do we make sure that we're able to be really responsive, because it's not like this situation is going away anytime soon, right? So it's becoming more and more important to like shore up how people are making decisions, and what's the priority, right? So is the priority, at a grocery store, like discounts for members, or is it ensuring wages for all the people that work there? So being able to kind of juggle all those really important decisions in that moment, and also I think we as a co-op community are very good at talking to each other about best practices, but I think talking to each other even more about distribution systems, and how we're able to create our own internal channels for supply and for sharing resources. I think that's something that's been on our minds in the worker co-op community for a while, and I think that in the future we're going to have to talk more and more about how we can do that with our own community and as a way of helping people to understand the importance of cooperativism in business.
Yeah. Right. Yeah, that's great. I'm certainly knowledgeable, and we've lifted up some examples at Ncba CLUSA of really principle 6 of cooperatives cooperating. The worker co-op in North Carolina that hurried up and created some new lines for personal protection equipment, masks and shields, et cetera, and using the cooperative community as a demand pull and saving those jobs. But that's that I think there's another principle that we can look to. I'll ask a question certainly related, but it's not the exact same thing. It has to do with technology. As crises typically do, they force innovation. Certainly we've seen the use of technology in many ways increased. I'm guessing, and maybe I'll throw this one at you, Mike, on credit union, that of course credit unions have been investing in technology to serve their members for years. But what have they been learning in this last 6 months, and what do you think might endure into the future?
Yeah, I mean, I think you're right. That question has a lot to do with the first question you asked, and I think what credit unions discovered was maybe a surprise to some of them, because obviously, like the food co-ops, credit unions historically been really heavily dependent, heavily focused on face-to-face interactions, branch interactions. Our members, even though they wanted technology, they demanded technology, they still really valued those face-to-face interactions. Well, I don't know that, we do a lot of testing around security and disaster planning and that kind of thing, but most of the credit unions that I've talked to didn't really go through the what if situation that would mirror what we just went through so much. Right. And so I think there was a lot of angst, a lot of anxiety around whether we could actually do this. I think most people were pleasantly surprised at how quickly we pivoted from the old distribution model to one that was much more heavily dependent on technology. And we're not in I don't think we're in the place we necessarily want to be from that standpoint. But I do think that we feel like we're in a good place overall. We have more work to do. And I think a lot of that work, from what I'm hearing, it revolves around this idea that people in great need from a financial perspective, they want to talk to somebody, but they don't necessarily want to talk to somebody face to face. And so in a lot of our the technology that we have, Zoom calls and stuff like that, would really be inappropriate in that situation. So do we have the mobile apps that allow us to intervene at the point where somebody really needs help, and acknowledge that they need help, and use our position as trusted advisors to get them from problem recognition to resolution more quickly than otherwise.
Yeah, that's a great. Thank you, Mike. Is it, other comments on kind of technology and what that means for your sector into the future? All right. I had a question come in on consolidation. So we know that in some of the sectors, particularly those, maybe a little bit mature, credit union and agriculture in particular, but then in some of the other sector too, is that we've seen consolidation over the years. Is it, what observations might folks have on the effect of the COVID-19 pandemic and what it might mean for the future?
Well, I'll take agriculture first. We've seen consolidation in agricultural co-ops for as long as we have data, going back to at least the 1950s, and probably considerably back before that. Events that tend to shake co-ops in our industry tend to accelerate, at least for a period of time, that consolidation. We have not seen anything that would lead us to believe that acceleration is going to happen right now because of COVID, simply because we have seen the funding for the ag producers, and we have seen PPP loans for the small to medium-sized producers that has helped backstop them up to this point. So those two things together, I think, are keeping it together. But if this goes on for a long period of time, if the depression of commodity prices on the ag side continues, if we have a change in leadership in Washington and the really preferential treatment of the agricultural sector changes, a lot of things could very much, move to the downside as we move into 2021. But that's a lot of ifs. And so, as there always is with economists, it's one hand and the other, right? So there's the possibility that things do change, they start to tick up, and we get back into a more stable position by 2021 for pandemic reasons and others.
Yeah. Okay. All right.
Doug, I'll add something.
That
I think in the past there has been probably only a modest amount of consolidation in the co-op grocery sector, to my knowledge. And as we think that a recession may be in the future, might be pretty bad, and in a low margin industry like ours, there may be some stores that aren't able to make it through. And frankly, I think we would hope that there would be an opportunity for consolidation rather than having stores go out of business. And to the extent that we can, we facilitate that. So I would just say, we would hope for that instead of the alternative.
Right. Yeah, that's a good point. Thanks, Robyn. I'm mindful of time. We're at 3:57, and I'm gonna ask a kind of an open-ended. Is there we've covered that innovation that was forced upon us that we might see into the future. We've certainly seen many examples of co-ops doubling down on concern for their members, concern for community, and how that co-op identity really expresses itself in a time of crisis. Is there anything that that any of the panelists here would like to add before we wrap it up?
I think I'll leave this at the end. I think this is the moment for co-ops to be the leader in pulling us out of this crisis. It's so clear to me that the reason that we're a part of cooperatives is because we know that there are issues with how businesses can run, and that cooperative business enables us to make sure that we have equitable processes in place and are able to take care of people in ways that other business models aren't able to. So I think this is really the moment that we need to be really loud and really strong in our advocacy efforts and in our educational efforts about all sorts of co-op models and all the hybrids in between, to make sure that people understand that this is how we can build back our economy by centering cooperative business.
Mo, I think that's a fantastic point. We look historically when people have really gone to scale in embracing the cooperative business model, and it's been in times of crisis. It was at the turn of the century, from the 1920s, certainly during the Depression, and then even in some later generations. But I think we're in a moment like that right now, and it's, of course, it's incumbent on the cooperative community to make sure people understand what the co-op business model can mean to their members and to their communities. So appreciate that. So we're at time. I just want to thank everybody who joined us today. This will be taped and posted in a few days at our co-op COVID resources. And thank all of the panelists for all your time today. And we'll be talking to you soon. Be safe. Thanks, everybody.